Hello everyone, welcome to another edition of Under the Macroscope, Skybound Capital's regular podcast series where we take a look at some of the macroeconomic factors affecting global markets, but also from time to time we take a closer look at some of Skybound Capital's group companies and the areas that they are involved in. And that is what we're going to do today. We're going to delve into the world of trade finance and take a look at Teybridge Capital. Now, Teybridge Capital is a member of the Skybound group of companies, and I'm joined by two of the directors, Lee Daly and Peter Martin. Gentlemen, welcome. We look forward to this chat. I guess the obvious place to start, and I'm going to start with you, Peter, because you're one of the most experienced people in this industry in the country. What is trade finance?
Trade finance is the financing of working capital in the trade industry, specifically between borders of countries. The working capital that we are talking about here is taking the asset of the trade and helping to finance that for the intermediary of that trade. So what we do there is that we do what we call structured trade and commodity finance. And we take a commodity that has been traded and finance the working capitals. Specifically in our industry, are looking at the SME market. The reason for the SME market is that I would say that at least 60% of the trade that is done in the world is done in the SME market, and they battle to raise their financing of working capital between purchasing a trade in the initial or the stock or the commodity and being able to have enough working capital to be able to sell it to the end user, both locally and internationally.
And just for a little more detail, how does it differ from conventional financing or, for example, credit insurance?
All right. Well, credit insurance we'll put to one side, but if you talk about conventional financing, a bank normally looks at a client and will never lend them more, as a rule, never more than 50% of their balance sheet. And what in a trade finance is a very small balance sheet, and therefore if they battle without normal regular security like in mortgage bonds, guarantees, things like that, to be able to raise the correct financing. The financing on these, even though they are SMEs, are large volumes of money. And what we try and look at is raising or helping to finance working capital between $500,000 and $20 million. Once it goes above that, banks will be more interested in lending at higher values, purely because that the companies themselves are more corporate, and when they're corporate they have balance sheets and they have been able to use regular security. In our business, we do not look at regular security, we look at the commodity itself as our
security.
Sorry. Yeah.
So, Lee, let's talk about Teybridge Capital as a concept, as a business. You've managed to assemble with Peter and his team a hugely experienced team. And that strikes me as being very, very important in this space because it's a very detail-driven asset class, if we can call it that. Now, Skybound Capital, as we've heard on the podcast series, is very involved in what we term private capital. And this falls into that category quite neatly. So what is Teybridge Capital? Who is Teybridge Capital? What exactly does it do and how did it come about?
Thanks, Matthew. Yeah, so Skybound is involved in private capital, focusing on private debt as one of the genres of that. And trade finance was and is just another element of this private debt genre. And what attracted me to start looking at the possibilities of using trade finance in the bigger scope of the private debt philosophy that we have was that trade finance is a much shorter duration than what we would typically do in our Prism fund, which typically looks at sort of 24-month duration facilities, whereas trade finance could be as short duration as 30 days going out to 180 days. So it allowed us to have facilities repaid quickly, essentially, and rotate the money that much quicker. So over a period of time, the concept I was busy looking at, very fortuitously, Peter and I were introduced together, and kind of the stars aligned, and we realized that we both had aspects of our businesses that we wanted to share with each other. So that's really how the process started. And now we have now we've managed to focus that into a specific trade finance fund, focusing just on trade finance. The team Teybridge is a partnership between Skybound and Peter and his team, which is now a team of about 11, 12 people. And one of the very important things, as you alluded to, Matthew, is the specialist skill involved in trade finance. I think in the beginning we would have thought that we had the capability to manage and administrate these types of transactions, but we learned very quickly in the first couple of sort of planning stages that it needed a very experienced team. And as a trade finance group, there's over 350 years worth of experience amongst Peter and the broader team. So that skill set, that administrative capability, operational capability, vital. And as Peter says many times, that you can do is a great amount of research and management as possible, but it's the administration which is key to the successes of these transactions.
So it's administration heavy. I want to pick up, Peter, on something that Lee said there around the shorter duration of the loans. This must be incredibly challenging when you're managing a fund and you've got assets that are committed or allocated by a client or a group of clients, just matching liquidity requirements with trades and vice versa. It must be a very difficult balancing act at times.
Okay, thanks. But just before I answer that, and this comes into it, is to discuss a little further what Lee said, was that the length of our trade is between 90 and 180 days, averaging normally between 90 and 120. And because of that and the control we have over the asset as if we own it, we can manage that security right the way through. And in any point in time that we are not happy with the security or that things are not going according to plan because of what has happened, even with COVID, with what happens, we can actually stop the deal after that, and it's not protracted over a term loan or anything like that, even an overdraft, which is over a year. Coming to the liquidity side, as you were asking about, is the fact that luckily at the moment we are always short of capital. The more we want, the more deals we get in, we are now having to push for more and more funds being invested. But at this point in time, you can see where your book is going. At any point in time, you know when something's going to be repaid and when a new deal, and you keep rolling that. But we plan always at any one point in time to have at least 5% liquidity to be able to carry or to pick up something quicker, or if there are redemptions, that we have the availability of that cash.
Now, Lee, in raising your initial capital for the fund, a lot of this came out of the Middle East, and a fascinating aspect of this fund is that it is Shariah compliant. How so?
Yeah, it was a very interesting road to follow. I think the large majority of us know very little about Shariah compliance other than the basics. And we had to upskill ourselves very quickly as to the request that came from our seed investor to manage a trade finance fund on a Shariah compliant basis. It just so happens, and actually what Peter was talking about just now is quite interesting, about how different we do things to the banks. Banks do on balance sheet lending, and what we are able to do is we take the commodity as the security, and the fund actually acquires the commodity. So one of the principles of Shariah is you cannot earn interest or yield, and there's a profitability that needs to be earned in the transaction, and that actually fits directly into the way Peter and his team have always risk managed trades. So rather than taking on balance sheet risk of the person borrowing money from us, The fund will actually acquire the asset, acquire the commodity at a discounted value, own it, and sell it to the ultimate off-taker for a profit. And hence the fund is able to earn a Shariah compliant return. So yes, a very interesting dynamic that we've had to adapt to, and it fitted quite well with what we do.
Now, there are obviously certain things that you can't do in terms of that Shariah compliance. But if we put that to one side, Peter, from your own point of view, when you set your own standards, what are the things that you won't do? When you set the rules and regulations internally for a trade that you would not look at financing, what would that be and why?
All right. To start that, first of all commodities need to be fungible. The word fungible means that any commodity that we own can be sold anywhere because of the fact that the quality, no, it's not necessarily quantity, sorry, the quality and the type of commodity can be sold, it's not labeled. So if you take, for instance, grain, maize, if it's a quality of maize and the type of maize, there is a market for it worldwide. That's so, it doesn't matter what commodity, but that's what we look at. The type of commodities we will not look at, though, is precious metals and precious stones, and obviously banned substances or illegal substances. But other than that, we will look at that and fund it. And our team is experienced over these years in the various commodities that we're involved in. If there's a commodity that we have not done but are interested in, a lot of research and development is done into the market, the trade itself, and the traders, and we will do a complete new risk assessment prior to us even being involved in something like that.
And you talk about essentially accepting ownership over the commodity. I mean, how do you satisfy yourselves with security over that asset, perhaps while it's in transit or as it moves through various parts of the supply chain?
The point is, as I said, that we're always going to have ownership. So if we've got a trader that has already got a supply agreement with the supplier and a fixed price, let's call it that, sale agreement with an off-taker, what we will do is, firstly, we'll never take pay-through risk. Therefore, when we make payment after we've studied the supply chain, which I'll go through right now, we will never pay our client, the trader. We will always pay the supplier, and we will always receive the funds directly into our account from the off-taker. Right the way through the supply chain, you've got the supplier, you've got storage, you've got transport, you've got from the docks to the import docks, and then again a sale. Every single one of those risks are identified, what could go wrong through each part of that chain. To start with, in storage, we'll have storage agreements, we'll have all risk insurance on the commodity. We've identified the commodity and what can happen to it, what will happen, or possibly can happen, and we, as owners, will have the insurance. Subsequent to that, it gets transported. We will know who the transporter is. We will know that the transporter has insurance, and we have an overall sleep easy policy over that transport. When it goes as an international, we'll have all risk marine insurance right the way through as owners of the product. We will, when we look at the other end, where we were talking about, we will never take credit risk on the off-taker. What we do is we either, which is the philosophy of ours, is to shift it, sell it, or if we accept the risk, make sure, damn sure you understand the risk that you're taking. So we do not take credit risk because we do not understand the risk we are taking there. So we will either have bank letters of credit for the fixed price for those goods on delivery or prior to delivery, or we will have credit insurance, which you raised, but it would be credit insurance on the off-taker.
So this is a hugely detailed space, Lee. And, we got into this at the start of this podcast, is that it demands experience. Peter referred to the fact that you're operating mainly in what you would call the SME space. And so you've really carved yourself a very interesting niche. So I have to ask, what are the future opportunities here? Because you've almost come together by default. You've found common ground between the two businesses. And you must be enthused by what lies ahead. Where is this asset class going?
So the interesting thing I've learned over the last number of years dealing in the space is the lack of banks playing in the space. As Peter alluded to, they're going to do a specific type of funding, which is great, and that's what they're experts at. But there's a large number of SMEs that are desperate for funding, and the more we've delved in this asset management, rather at least asset class, there are trade finance funds out there, but there's a lot less of them than what you'd expect. And there is a big demand for trade finance. So I think where we hopefully see where we see some hopeful growth over the years is slowly but surely being more recognized in the marketplace, having funding, and looking for specific types of trades. So, there's certain things we won't do, but there's a lot that we will do. And particularly right now, with commodity prices where they are, of course, trade must always continue, but there's a lot of impetus to get trade done at these values because people are making a lot of money out of these types of transactions, but they still need them to be funded. So yeah, I think from an outlook perspective, we see a lot of demand for what we do, and not only for the fact that we have funding, but it's the way the transactions are structured. And what I've also learned out of Peter and his team and how they do things is the outcome of these transactions are actually looked upon very favorably by the end or the borrowers of this transaction because of the specific way they're structured. Mm-hmm. It's suitable to the way they do things, allows them to be more growth orientated, I guess, in growing their own businesses. So yeah, it's an exciting space.
And there's hardly a macroeconomic commentator out there at the moment who is not crying out for the export taps to open for South Africa in order to stimulate growth. I mean, that in itself has got to be very positive news for you.
It is very positive. If you look at what's happened over the very short period of time with the war, with COVID and everything, and all those aspects that have happened, is that there is a huge demand for what we call hard commodities, going from coal, which a lot of banks are not can't or won't do, to chrome and the likes. And there's a demand out of South Africa. Chrome, for instance, what we supply 80% of the chrome market, coal, and there's markets for that are screaming for coal because of the lack of power generation that is being supplied. So we are there and we are willing to help. But always the time we have to look for more and more investors. And more investors that come in obviously help us, but it's to prove to them that we actually know what we're doing.
I think from a South African perspective as well, we export a lot of commodities, and we can export a lot more if there's more funding in place. Yeah. And we definitely can fill that gap with access to funding, and we can manage those trades very effectively.
And as always, in the fund management game, you've had to prove your worth. You've had to prove to potential investors that you know what you're doing in a highly specialized space.
Absolutely, and so we've built up a near 3-year track record now in running our fund. So in our current Teybridge environment and the Skybound Shariah Trade Finance Fund has got we'll have a 3-year track record in a month or so's time. But I think beyond that, so this format is now being proved, but I think just looking at the CVs of Peter and his team, I mean, that's really where the skill set really lies.
Well, really exciting space. Great to get your insights on this asset class and what you are doing within it. Thanks, gents, very much for your time.
Cool.
Thank
Pleasure.
you.
Thank you, Matthew.
Well, if you have any questions or queries about Teybridge Capital and indeed the asset class that is trade finance that we've been discussing today, do send them through to the email address info@skyboundcapital.com, or you can go to our website for more information. Don't forget, you can download the Under the Macroscope podcast on Apple, Spotify, or the Google podcast platform for Android, and all past editions of Under the Macroscope are available at our website www.skyboundcapital.com. Until next time on Under the Macroscope, cheerio.